Hi, my name is Akil Stokes. I am a professional trader and I am suffering from a drawdown. Hey guys, Akil Stokes here, head currency trader at TradingPAUD.com, and welcome to another weekend review video. If you are one of the, 8,000 now, or close to 8,000 subscribers that view this video on a weekly basis, thank you for joining me once again. And especially big thank you for last week. Apparently, I got a lot of likes on last week's video where I went on a little rant and not many dislikes at all, which is rather rare on the YouTube world. So thank you a lot for that support. I did read each and every message, and you guys are very supportive, and that's why I like working with you guys every week. If you guys are new, welcome to my weekly trading video where I do a little recap of the week that was, and often show you some of what's on my radar coming up. I do have a trading opportunity, an at-market trading opportunity on Pound Aussie that I want to show you guys today. But I also want to take some time to talk about drawdowns and dealing with them. I also want to apologize for my attire today. Typically, I try to put on something presentable for these videos, but you know what? I just came back from a workout. I'm feeling good. I've got nothing left on my schedule today, and this is one of the freedoms of being a professional trader. I can, just relax in my loungy gear. So next week I'll put something collared on or something, but today let's just, let's relax a little bit. Anyway, I want to talk a little bit about drawdowns. I'm going to save that for later. I want to start with a trading opportunity on the Pound Aussie. So let's head over to the charts and check that out. All right, so right now I'm looking at the Pound Aussie daily chart, and we're actually coming off a pretty decent sized pattern. I think it was a few weeks ago. Just to recap, we're looking at a Gartley pattern here. We had a move from X to A to B, B to C right down here, and we had a CD completion, I think originally right up here above that 199 even handle. And then we rolled over to hit target ones, or come very close to hit target ones. Hopefully you did. We had our target ones. The 382 was technically right below that 96 even handle, that 196 even handle. However, if you've been with me for any time, especially on the higher time frames, you know how we like to react and how we adjust our trades to those psychological numbers. So hopefully you got above that and were able to capture some profits, some pretty decent profits. Looked like almost a 300 pip trade there. But that's in the past. I just want to recap and say congrats to anyone that did take that. I know a few of you, I was talking to a few of you while you were in it, so hopefully it worked out the right way. But I want to look at, where are my charts? Man, I got them everywhere. I want to look at this pair on the lower time frame. Let's go down to the 4-hour chart. Let's go down to the 4-hour on Pound Aussie. Here we go. And we actually have, or actually let's sneak to the 60-minute chart. Well, let's do this. There's so many things I want to talk about, and usually I'm more organized than this, but I'm recording this right after coming back from a workout, so I'm pretty sure I'm a little dehydrated. There we go, got some water in me. But looking at price action, here's what we've done. You can see we have our DSR levels, our dynamic support and resistance levels. We have a very large bullish candle from today and last night's Aussie action coming right back up into a previous level of resistance. Now, if we go down to the lower time frames, we can kind of measure out the ebbs and flows here on the 4-hour chart. Just look at the ebbs and flows. New structure starting point down here. New structure high, outside return. We ebb and flow a little bit in here. Boom, boom, boom. Put in a new structure high, higher close. Outside return. New structure high, outside return. New structure high, and then boom. We go into a bearish rotation, breaking both of our previous outside returns. This is the first signal that, hey, we may see some bearish rotation on this pair. Now, we've rallied all the way back up to our previous highs here. So for someone looking to get short, this is going to be the optimal trading opportunity. And I call this the optimal trading opportunity. Why? Well, because if we're taking a short entry here, and again, this is if you're a counter trend trader, if you're another type of trader, you're waiting for a breakout or something like that. But if you're looking for a short entry up here, stops need to go above previous structure highs. So the closer you get to these highs, the lower that stop needs to go. The closer you get to this high, the bigger the reward needs to go. or the bigger the reward can be. So keep that in mind. That's the basic premise of this trade, IPDE, identify, predict, decide, execute. We identified what the market's doing. I'm predicting what may happen at this level. Now I need to decide how I'm going to take advantage of this trading opportunity. And then, of course, last, actually have the guts to push the button and pull the trigger and take the trade. But let's go down one more time frame, because this is going to get a little bit more interesting, because we actually have an advanced pattern here as well. I'm going to pause the tape for a little bit to see if you guys can see it. Syndicate members, we've been looking at this before, so don't cheat. Well, I guess it's not cheating, because I'm used to being in a live room where people can actually type stuff in. You guys, you can't type anything in here. But we're looking at a cipher pattern completion here. We're looking at an X leg up here, X to A to B, a B to C, and then a cipher pattern completion right up, I think it was right here. Let's see where that 786 comes in at. Swing high to swing low. Boom, 786, a little bit off, right up at 99.61. So advanced pattern traders, you have a cipher pattern, a bearish cipher pattern completion right here at 99.61. If you missed this and you trade the cipher pattern, well, you've got about a 40 pip cushion here, because the market has rolled past or pushed past that initial entry by about 40 pips. Now, some of you may have not taken the trade just because of how big the stop loss has to be. I know I talk a lot in my live room in the syndicate that I want to keep my average stop loss. I want to keep my stop loss under 100 pips. And it has nothing to do with account size and risking a certain amount of my account per trade. It simply has to do with consistency. There's a consistency in how much I'm risking. Pip wise, there's a consistency in how much I'm looking to get as a reward. And that's kind of what makes my system click. That allows me to know exactly the numbers that I should be hitting and to tell if I'm on the right track as a trader, or if I'm doing something wrong, or some type of system or strategy I'm trading isn't working the way I'm supposed to. I know that it may not make sense to you, but it doesn't have to make sense to you. It has to make sense to me, because it's the way I trade. So I hope you understand that. And if you don't, then you don't. I'm sorry. But I know a few traders that I work with that come through my training course, they do. So this was a pair that, although we had the advanced pattern completion down here, many traders did not take the entry because of that higher risk. Now there's another opportunity. A, you can either take it right now at market, or B, you can say, although I can't take this pattern, I'm still looking bearish, and I'm going to see, is there a way I can get another trading opportunity up here? And I'm going to pause the tape one more time to see if you guys can think about it. Again, go through your tools, go through, for you guys, especially for you guys that have been through the 12-week transformation course, think about the modules you work through. What did we work on? Week 1, price action. Week 2, fibs, double tops, double bottoms. Finally combining it into that CTS score, combined technical score. What can you put together? Which of these technical skills that you now know and hopefully have mastered can you put together? And you can easily put together a double top right here. You can see the market has spiked up into our DSR zone. This is the same one from the daily chart. We spiked up. We've tested that level. We've retraced off that level. So the bulls have taken somewhat of a relief, and the bears are starting to probe to see if this is a level they can take advantage of. What I would wait for is a retest of structure. So for price action to push back up, retest this structure, and I would look for a second hold. If the bulls push up to this level and get rejected again for a second time, it's a good sign. It's a good sign that there's some selling pressure up here, that it may be time for the bears to take over, and we may see some type of relief. And also, of course, with a double top, we know how to play stops with double tops. We can easily use our ATR-based stop rules to get it above that double top. Just make sure you get it above these structure highs as well. And, well, depending on how this completes, you can essentially set yourself up with a risk reward that looks something like this, a risk of this much. Again, we're just projecting right now. We got to wait till this actually happens to know what it would look like. But giving you guys an idea, a risk that looks something like that compared to a reward, well, really depending on how aggressive you are as a trader. There's a few levels that I would look for. I always like to look for structure first, and a structure level that is standing out to me right away. But we'll do this first. Let's bring in the fibs first. I know a lot of you guys like fibs. We'll bring in the fibs first. Let's bring in a Fibonacci retracement, swing low to swing high. Boom. You can see there's 382s. If you're a fib-based trader, you have 382s. You have 618s down there. If you're a structure-based trader, look left. Structure leaves clues. What levels has the market hit before? Structure right there. We've got structure right there. We've got structure here, structure here. We've got structure looking left there. Identify that level. I like to call it think like the other trader. Identify that level that if you were looking to buy, identify that level that you would be stalking if you were a buyer. And that's probably a good sign or a good area of where you want to take your targets off, or at least start protecting your profits. So that's a trading opportunity on pound yen here. Excuse me, not pound yen. That's a trading opportunity here on pound Aussie, something you can take advantage of in the market right now, of course, tomorrow, if it meets your rules, of course. Don't trade this because I said trade it. Trade it because it meets the rules in your trading plan. Now, I do want to talk a little bit about drawdowns and dealing with them. As I mentioned earlier, I am in a drawdown. How come I'm not in the dumps? How come I'm not kicking the cat, throwing computers and breaking things? Why? Well, because it's expected. I mean, guys, if you're going to be a trader, if you're going to be not even a full-time trader, if you're just going to be a trader, you're going to go through drawdowns. I'm sorry to say this. There's no avoiding them. They're going to happen. It's just the way it is. A lot of people come into the trading markets or the trading field with the idea that, hey, I'm here to make as much money as I can, as quick as I can. It's like a get rich quick scheme. And that's just not the case. Trading is really a grind, and it's really about survival. It's not about doubling your account. It's about surviving. And the ebbs and flows of trading really go like this. You know, you have a good day or a good week or a good month. You stack a little bit of that profit, and then you just hang on and survive for a few weeks, a few days. You try not to give that profit back. You try to survive long enough to catch that next hot streak. I don't know how many of you guys gamble out there. I'm a big craps fan. Craps is my game of choice because it's very similar to trading with the probabilities and the numbers and whatnot. But the people that get burnt at craps are the ones that are shooting for, the boxcar, shooting for the big 30-1 numbers, where the people that like me, who the casino hates, what I do is I consistently bet certain numbers, and I try to survive the bad rolls. When someone's crapping out, I just try to survive it, maintain capital, and have enough for when that big roll does come that I can clean up and create new equity highs. Trading is very, very similar. If you're not a craps person, I'm sorry it didn't make sense to you, but hopefully you get the point. And even if we take a look at my equity curve here, which I'll bring up on the screen if I can find it, this is a live equity curve. These are the results that Jason and I have seen in the syndicate this year. And yes, we're still up about 40% for the year, but I want you to pay attention to how that 40% came. It isn't big wins, guys. If you're seeing it, it's sideways movement, a couple hot weeks. Sideways movement where we do nothing, a couple hot weeks. Sideways movement where we just maintain. We don't really give a lot back. We don't really gain a lot either. Hot week, sideways movement. Again, it's surviving, maintaining until that next big week comes. And the issue that I see with a lot of traders is they have trouble sticking with their plan. Instead of surviving, they get frustrated. They start over trading or getting away from their strategy or skipping trades, and they just don't survive enough to catch that next hot week. They give up. They blow an account. They're sent home before they can take advantage of their hard work. And we actually had a little bit of a discussion in the live room today about it, and I'll show you a quick 5-minute clip. Yeah, stop looking for a website to give you the answers. Do it yourself. Because I'll tell you what, not all websites are going to give you. I'd be very, very cautious with trusting others' opinions. I'm going to give you a great example in a second, as soon as I load it up. Because here's something I found yesterday. Where's it at? Harmonic helper. Check this out, guys. Cipher pattern, right? This is why you want to be careful with the internet. You may get the false information because apparently in the perfect cipher pattern, the AB leg should be a 3D2 or a 618 retracement of the X to A leg. The C point should be a 113 to a 1414 projection of X to A. Interesting. Yeah, well, yeah, 113. I've never heard of that, but apparently this is how you trade a cipher pattern. So yeah. So you want to be careful with what you find. More importantly, it's not even about the false information, but you really won't trust it until you do it yourself. That's the point of backtesting. Yes, you can find filters and whatnot for patterns and whatnot, or whatever your system is to make it more profitable, to try and make it more profitable. But the main thing is the trust. Because here's what's gonna happen. We'll take two examples. We got Jason Greystone in the room, right? Who backtested the Aussie Canada. Right? He's backtested cipher patterns on Aussie Canada, spent, a few weeks doing that. His backtesting results came back positive. He knows 100%. He knows 100% that pattern, the cipher pattern, works on the Aussie Canada, right? He has a 100% belief. Jason can take 10 losing cipher patterns in a row. Let me ask you this, Jason, if you're in here, right? If you take 10 losing cipher patterns on the Aussie Canada, what are you going to do in the 11th cipher that comes? Are you going to take it, or are you going to let it go? You're going to take it. Why? Because you've done the back testing. You have 100% belief that it works on that pair. Now, for someone else, let's say you read online that, cipher patterns work great on the pound dollar. You read it and you're taking someone else's word for it. You take 10 losing cipher patterns on the pound dollar. What do you think's happening on the 11th trade? Are you starting to lose a little bit of belief there? Because now it's someone else's word and you're like, well, Pip Skyper X said it was, but I don't really know. You guys see what I'm getting at right now? Yeah, it's the belief. It's the belief that matters, because the belief is what's going to get us through the drawdowns, right? I've been in drawdown for 3 weeks now? I'm on my 3rd week of drawdown. Why am I still trading? Right? Why am I still taking these trades? Because I believe 100% in what I'm doing. I know that I will take a drawdown, and I know that I will bounce back because my backtesting results have shown it. My historical trading results have shown it. I trust myself. I trust my system. If I didn't have that belief, I guarantee by this point I'd probably start making mistakes. I'd probably be seeing what we take earlier, that bat pattern on dollar yen earlier, and be like, well, maybe I'll pass on this one. Right? Because I don't have that, because now I'm taking someone else's word for it. Aaron said that these things work, but what if, do I really trust Aaron now? I trusted him before when I read about it, but do I really trust him now? And as soon as you get that little crack in your belief, you know how cracks are, guys. It starts with a little crack, and then cracks just get bigger and bigger and bigger until it breaks. Same thing as trading, right? You get one little crack in your psychology, guess what? It gets bigger and bigger and bigger and bigger, and then eventually breaks. So the main point of backtesting is to have that belief. Now, what I would say is do this, Ian. If you can find a site that does that. So that's it for this week, traders. I hope you guys enjoyed my video as always. If you like it, please share it. Please hit that like button. Please subscribe if you're new. I do this every week. You'll see on my YouTube page there are, I think, over 100 free videos. So take some time and watch them. And if you're new to Trading Powered, if you never heard of Jason Stapleton or never heard of myself, go and check out our website, www.tradingpowered.com. We have hours and hours of free information on there. We have trainings on there that will cost you thousands of dollars other places. So make sure you go to our website, tradingpowered.com, click on the Learn to Trade tab, and just scroll down and have some fun. Again, we have articles, ebooks, quick hit training videos. We have our bigger training courses, Into the Gray, 2618, Turning Point, all types of stuff on this website. So make sure you spend some time this weekend and check it out. And of course, if you like what you hear, if you like what you see, if you want to get more involved on a consistent basis, come join me in my live trading room. Go to products and services, hit the live trading room, start a 1-week free trial. Come for a week. see what type of community we have, see what type of action and what type of lessons we learn in the room. And if you like it and you're able to stay, we'd love to have you. We're steadily growing that room with more and more quality traders. Keyword quality traders. We kind of, they do a good job of running out the hot shots that think they're going to come in there and boss people around and show off. They usually leave pretty quickly. So we try to keep quality traders that make the whole group better. So join me for a week and see for yourself. There's nothing that I can tell you that is going to be better than just seeing it for yourself. So that's it for this week, traders. Syndicate members, as always, non-farm payroll Friday. I'll shoot you the link tomorrow. You can join in the live room as well. I'll give you that through your email, so just check it tomorrow morning, my time. And until next time, plan your trade your plan. Good luck tomorrow in the markets during the non-farm payrolls, and of course the average hourly earns. But I'll see you guys next week. Take care.